and a lot of people struggle with painting or with cash flow. And so on this show, I've got Kyle Stroshine, and Kyle Stroshine is going to talk about the 6 tips to ensure your business has cash left every month. Kyle, welcome to the show.
Thank you, Paul.
How are things?
Really well. Thanks for having me.
Good.
Finally, spring is around the corner here.
Yeah, it feels like that, eh? So cash flow, you're a bookkeeper and you own One-Time Bookkeeping, and you help a lot of contractors with their cash flow. So in this short video, if you can show the viewers your 6 tips on how we can help maintain and hold more cash at the end of every month. Let's hear it.
Yeah, as we were discussing, cash is king. And these are 6 tips I have that can ensure your business has money left at the end of the month. As a bookkeeper, a lot of my clients come to me with their books out of order, things are a mess, and they are taught first and foremost that profit is what they have left at the end of the month. As accountants, this is the number that they've been taught is important to look for. That's the scorecard. But then they look in their bank and there is no cash. So what I want to talk about today is focusing on cash. And one of the most important tips, these are the 6 tips that Paul has put on the board. Number 1, pay yourself first.
What do you mean by that? Pay yourself first. Like, I got employees, I got material to pay, I got gas to pay. How can I pay myself first?
It's hard. I get it. We're taught this idea from every guru out there. Pay yourself first. And it's kind of cliche. You know, it's it's one of those things that's easy to say, but hard to actually do. It's like, how do I do it? And I think how is a paradigm shift. And this idea is not my idea. This was developed by a man named Mike Michalowicz in his book, Profit First. He has this really knock your head against the wall, simple, easy concept where traditionally accountants and bookkeepers and everybody said that your sales minus your expenses is equal to profit. So what that means is, like you said, pay your employees, pay your gas, and whatever's left over is mine to keep as the business owner. Well, what if we change that paradigm to say sales minus profit is then equal to expenses? And what I mean by that is if you sell a job, you complete the job, you set aside 2%, just start with 2%. The goal is 10%. But if you could just start putting away 2% from every job sold, I think you'll have, at the end of the month, at least a little bit of money. And then as over 90 days, you've got this account that is built up, you can pay yourself what's called a dividend. Probably never paid. A lot of my contractors don't ever even know what that is. So the way the system works is simple. In the book, he tells us how to do this and how to accomplish it. I'm not going to go into depth on that right now, but it's very simple. He says, set up 4 accounts. Go to your bank that you deal with. You've got your main operating account where everything goes into now. Set up one for profit, a savings account. Set up another account for the tax man. And that was one of my other tips, was pay the tax man. He says, set up an account for your owner's compensation. So that's 4 accounts. And what he says in the book is on the 10th and the 25th of every month, you physically move the cash from that operating account into those other 3 accounts.
So it's just a matter of making a habit of doing that then.
It's totally a habit. Yeah.
Can we get AI to automate that for us or what?
I don't have that solution today, but I just set this up for my wife's business. She's been an entrepreneur here and she keeps asking me to do her bookkeeping. And I was like, why don't you just do it this way? Just on the 10th and the 25th of each month, set aside money for taxes. I went and set them up at the Royal Bank. It was simple. Took 10-minute meeting with the banker. She set up the savings accounts for free, and you get 2 free transactions a month. So now at the 10th and 25th, she just has to move some money over into profit and some into taxes, and the rest is spent on expenses. And that's okay. That's what it's there for.
Okay, well, that's tip number 1, I guess. Pay yourself first and look at it that way. What's your tip number 2?
So tip number 2 is knowing your numbers. Although the profit first system works well and it's relatively simple, you still need to know your numbers. What I mean by that is to create a financial forecast and a budget. So at the start of the year, what I'd recommend is doing a projection on how much income you want to make this year, right?
Okay.
So as a painting contractor, let's say you want to make 100 grand in revenue. You want to do 100 grand in jobs this year. Industry benchmarks say you'll make 20% take home. So that's 20 grand. And then work backwards as to how much your expenses will cost. So there are benchmarks. There's industry benchmarks you can find. That's kind of something that we specialize in. We know painting. We know out of 100 clients, exactly how many clients hit those KPIs or the number, like what are your typical gas expenses are 5%, typical marketing expenses are 3 to 10%, typical employee expenses are about 30 to 50%. So once you start with what you want to earn, we can work backwards. So you know what the numbers are. And then you can measure your actuals to those budget every month. And you know the percentages to set aside into those buckets of what to pay tax and what to pay profit and what to pay owners.
So knowing your numbers, is that like literally looking at a spreadsheet? Is that what you're talking about?
Yeah, that's definitely what we specialize in. If that scares you, just even writing it down on a piece of paper, 12 months from now, income here, costs of goods sold is the term we use in bookkeeping. Overhead, direct and indirect are the 2 expenses that I'm talking about.
Because I think that's one of the hard things for most painters is to actually know your numbers at all time. Really, most of the time, I just know what's in my bank and I know what I'm paying for expenses. So, I guess having regular spreadsheets that I can jump onto and take a look at, like, from a macro point of view, what's my gross profit margin? What's my expenses? How much commissions are coming out? What's my gross, everything? What's my net, my profit, everything, right? I think that would be helpful. So that's what you mean by knowing your numbers. Because I guess if you know your numbers, then you obviously know when things are going to get tight, right?
Yeah,
Leading
cash in the bank
indicators
is a good number, but a forecast just allows you to grow. So someone that just has cash in the bank, to me, is saying they don't really want their business to grow. They're just hoping on a dream, and it's, hopefully that bank account's going to grow. Whereas a forecast, you can plan ahead and see those bumps in the road and where you have to improve.
Okay, cool. And so knowing your numbers. First one was paying yourself first. Second one was knowing your numbers. I don't really like this this third one that you're going to go to here, but I guess you got to pay it. So tell us more. Tell us why paying the tax man is actually going to help.
Cash. Well, if you don't pay it, they're going to take it from you. So they're going to get it one way or the other. So you may as well pay the piper and plan for it. That's kind of covered in what I just said above about setting aside some money for the tax man. But how much to set aside is important because we don't want to overpay the tax man. If then that becomes a savings account for him and your money's not working for you. So you want to only pay him what it's due.
So is that something that you as a bookkeeper would do as well? Is that, generally speaking, you'd let me know, hey, Paul, you're going to be ending up owing this much. You better start putting away X amount kind of thing?
Absolutely. That's part of the tax planning process that we provide to our clients, peace of mind in terms of the tax man, right? This is how much you're going to spend this year based on our budget and our forecasted plan. So let's set it aside ahead of time.
Got it.
But the discipline is actually putting the money in there.
Yes.
But you're right. A lot of entrepreneurs just don't even know what they owe, or more importantly, how to pay it.
Yeah. And then there's tax, and then it accrues interest. And then, I've had some people that actually, they get their assets taken. So their ladders and their livelihood, their van, their sprayers, it's taken. And then now you can't even work, right?
Yeah. Yeah. And the government doesn't make it easy. There's so many forms to fill out, and it's a steep learning curve to understand when and what to do, what to file, when to file. CRA does make it easy with online banking integrations and online business accounts, but it's still a steep learning curve.
So you say CRA is in Canadian Revenue Agency, and for Americans, it's the
Yes.
IRS.
Yeah. So I'm Canadian, and most of the things I deal with are Canadian tax laws and tax planning, but it's similar in the US.
And you can still service US clients, right?
I can still service US client. Yeah.
Okay, cool. So I think, let's get rid of that one. We all understand we got to pay the tax man. He's going to come get it regardless.
Yeah.
This next one I think is critical. When I talk to a lot of painters through strategy calls,
Yeah.
I noticed, and I just made a video today, and I said 99% of life is showing up and 1% is finishing. And we've been taught that 97% is an A. So heck, why do you need to do more? Explain number 4 here that you got as a tip for how you can leave cash at the end of at the end of every month. Explain this tip number 4. What do you mean by this?